you have the Bitcoin price chart here, and I want to throw it up because you also have a bunch of different indicators that you kind of look at. So I was wondering if we could kind of throw them up and you could talk through a little bit about what you look at when you look at the charts and Bitcoin.
Sure. Yeah, so a couple of things. First, I always like to say at the outset, especially during times where I'm either being crabby or overly bearish, is that from a long-term perspective, I'm wildly bullish on Bitcoin. Right, like I'm as bullish as it gets. I'm as obnoxious as it gets. I think it's going to go much, much, much higher than where it is today over the coming years and decades. So for the most part, I think most people shouldn't worry about trading. Most people don't have the technical skills that Tone has. And he has a lot to learn if that's something you're interested in. But for the most part, most people will do the best just by simply dollar cost averaging, right? Just buying little bits of Bitcoin here and there as you're able to and holding on to it for as long as possible. I think you'll do really well. So getting back to that chart, sorry, is that you had up. So why did I put that chart? I'm a momentum guy, right? So Tone and I go back and forth on TA kind of stuff. But what I think helps me the most as a fund manager and investment advisor is I like momentum. And so what do I have on that chart? The top part of that chart shows the price of Bitcoin, and it has some Bollinger Bands, and then it has some moving averages. It has a 10-day, 50-day, and 200-day moving average, which is that thicker red line. And so what I like to see is for the 10-day and the 50-day to be sort of stacked on top of each other. So I like to see the price at the top and the 10-day right below it, and the 50-day below that, and the 200-day below that. But what gets me starting to think bearish is when that all starts to reverse. And so right now, the reason I put that chart up there is because we just, a couple of weeks ago, the 10-day crossed below the 200-day moving average as well as the price. And the 50-day moving average, just as of today, is below the 200-day moving average. To me, that's significant. That shows that there's an actual real bearish momentum, both in the very short term and kind of the midterm as well. Just for people so they can get their bearings. The last time that happened, I included that on the chart to the left, was back in January of 2022. At the same time, the liquidity was starting to roll over, and I think Bitcoin sniffed that out, and it started to roll over as well. And as most people know, it didn't really recover until the beginning of this year and from a price standpoint. So hopefully this is just a fluke, right? Hopefully we regain momentum again, short-term momentum, and we head back above the 200-day moving average. At that point, I'll be feeling much more bullish, at least in the near term. But until it does, I'm a little bit concerned about these momentum changes, and unless this is just a little short-term fluke, which it always could be, you never know. I just have no idea. But I say follow the trend. The trend is your friend. I said momentum never lies, but it doesn't tell you why. And so I don't know why it's doing this necessarily. I think it has to do with liquidity. I think it has to do with the economic metrics that just continue to look terrible on multiple fronts. We can get into that too. Yeah. But Bitcoin is telling us something, and I say it's telling us that maybe we should be cautious from a short-term perspective.
Yeah, and you brought up like the difference in time horizons. Obviously, you're bullish long term, and you should dollar cost average, but we are talking more short term here. And it was interesting when it's trading below the 200-day moving average for a while, because historically, if you're going to think about investing for the long term, that hasn't happened that much. And usually when it happens, it's probably a good time to allocate for the long term. But you mentioned this like short term, midterm kind of bearish momentum, and you brought up the economic indicators. So I was wondering, what do you mean by deterioration in these economic metrics specifically? Tone, if you're seeing similar things in terms of the economic metrics, or if you could kind of chime in. Let's first go to Dr. Jeff. What did you mean by that? And then get Tone's reaction.
Sure. So first of all, I think an overarching theme, I think, of most of this decade is going to be stagflation. So what do I mean by that? A stagnant economy or economic growth mixed with higher and more volatile inflation, especially than what we've been used to, right? We came from the decade of basically ZIRP, zero interest rate policy, where interest rates were very low or even negative, which is insane and mathematically bizarre. I don't think we're going to go back to that. I just think we're in a new secular trend now. And so overall, my overarching theme for this decade has been and continues to be stagflation, even though we'll have periods where that can change. It depends what we're talking about, like from quarter to quarter. It can be a little bit different. But what is happening? The economy is hanging in there, right? Unemployment continues to remain low, although I think we may have seen kind of a low point, and it's possible that will start picking up now. When you look at things like ISM manufacturing statistics, we've been in a manufacturing contraction here in the US for almost a year. New orders have been contractionary for a full 12 months, and manufacturing itself has been, I believe, 10 months straight. We just pulled out of 25 straight months of real interest rate losses, meaning that people are getting poorer. So even if people's wages are rising, the cost of living has been rising faster. So people have been getting poorer, and we just broke a 25-month streak, which I believe is the longest streak ever in the United States, at least as long as data goes back. Services continues to remain the bright point. It's just barely hanging on, barely expansionary, and that is what continues to pull the or continues to keep the United States from falling flat out into a recession, because we're such a strong services based economy, about 70% services based versus 30% manufacturing. That relatively, it's mild, but it is strong and it is expansionary. That services number continues to keep the economy out of recession. I don't know if that's going to continue to hold. I can't predict the future. But I look at those kind of things, and then I factor in the fact that we're having this credit crunch. Banks are loaning less and less. Credit card rates, usage rates are increasing. People are not paying off their credit card debt at a faster and faster rate. Almost all of those type of metrics from a credit perspective look terrible, and they look like they always do right before we head into a pretty serious recession. So when I look at all of those things, and then I factor on top of that, the Fed is actually still putting on the brakes, right? They're still talking hawkish. They're still keeping interest rates high. They're still talking about inflation. They're still doing quantitative tightening technically. All of that they're doing in the face of a slowing economy, to me, points that we're just going to head into a recession. I don't know the timing, but whether we like it or not, it just looks like a bread and butter recession is coming our way.